Hey everybody, Rob Maurer here, and today we are talking about a recent interview with Elon Musk and Kara Swisher for the New York Times. We have a few Elon Musk tweets to catch up on, some news on the supply chain, and a couple other quick things as well. So to start the week off, Tesla stock on the day finishing up 3.4% to $421.20. That compared to the Nasdaq, also with a strong day, up 1.9%. We'll start off today with the highlights of a Kara Swisher interview with Elon Musk in the New York Times. As always, I would recommend listening to the full interview. It's about 45 minutes, pretty interesting. But there is a full transcript available online, and I'll link that in the show notes as well. Tesla wasn't a huge focus of the conversation. Of course, it was sort of omnipresent throughout, underlying a lot of elements, but they did start talking about Tesla, specifically about Battery Day and some of Elon Musk's thoughts coming out of that event. And Elon was actually pretty unhappy with how the press has covered the event and how Wall Street has reacted in some corners. I think a lot of us can understand that. But Elon started off by saying, quote, "Smart people on Wall Street have usually not the faintest clue about manufacturing and how difficult it is. They think that once you have come up with a prototype, well, that's the hard part, and everything else is trivial copying after that. It is not. That is perhaps 1% of the problem. Large-scale manufacturing, especially of a new technology, is somewhere between 1,000% and 10,000% harder than the prototype. I would really regard, at this point, prototypes as a trivial joke. The press coverage of this event was sad," end quote. He elaborated, quote, "A sad reflection of their understanding, really," end quote. So Kara Swisher asked Elon to explain it. He said, quote, "I mean, I'll try, but I'm also not trying to convince people that much. The results will speak for themselves. The cells we're talking about, we have produced many of them. We have had cars driving with those cells since May. My premise is never to try to convince people why they should invest in Tesla. Sell your stock. I don't care," end quote. This is a mindset from Elon that we have heard in the past. I think it is a bit surprising to newer investors, but those that have been following Tesla for a long time, this is just sort of par for the course. We've had numerous tweets over the years, I think 5 or 6 times, where Elon has said the stock price is too high. They actually talk about that, so we'll talk about that in a second. And on a previous earnings call, Elon has made the same point, saying, if you do not like volatility, do not buy our stock. I don't have the direct quote, but it's pretty close to that. So this sort of mindset isn't new. This is a little bit different than Elon's focus on short sellers. Elon doesn't like short sellers because they actively try to harm the company. Not saying that's the case for all short sellers, but some fall into that bucket, and that represents actively trying to harm Tesla's mission. So Elon definitely does not like that. But for an event like Battery Day, I've heard a lot of feedback of people saying Elon should have presented this differently, like Wall Street doesn't get it, they could have helped Wall Street understand it better. That's probably true, but it's also not really the point. The audience is much broader here. This is Tesla trying to both recruit talent and also push the industry in the direction that Tesla is heading. Tesla does actually believe in their mission. They do want to do that. They're not just focused on being the biggest company in the world or things like that. They actively want competition to try and keep up, and they also want to stop investment in internal combustion engines. Laying out this roadmap can help do both of those things. Tesla could have easily walked through the math on what 3 terawatt hours of battery production does from a revenue perspective, from a profit perspective, but this is not a financial presentation. This is an engineering and technological progress presentation. As far as the coverage from the press, yeah, it is disappointing, but we live in a day and age where breaking news is the most important thing. Analytical and journalistic rigor have taken a back seat to that thing because it's not as valuable in terms of ad revenue. And really not even taken a back seat, but pretty much just kicked out of the vehicle entirely in some cases. So if I could offer just a small piece of advice to Tesla, if they do want better press coverage around things like this, have a press kit. Have something that's embargoed, sent to a few very specific people that have proven that they can be trusted with not breaking that embargo without much time in advance, and tell them what is the most important thing about this event. Tell them the story that you want them to write. The press is not filled with a bunch of people that are engineers that can break this down and understand this, hour and a half long presentation about battery chemistry and manufacturing technology, all of these things that Tesla went through. But as soon as Battery Day happens, they need to have their article out like that. If Tesla can pull together a super clean, super simple press release for some of these things, I think that's going to go a long way in terms of getting better coverage. Anyway, getting back to the interview, Elon did talk a little bit about the stock price again, as I said earlier. He says, quote, "I think some critical mass of the market has concluded that Tesla will win, I guess. I mean, I've gone on record already as saying I think the stock price is a bit high. That was well before its current level. But if you also ask me, do I think Tesla will be worth more than this in 5 years? I think the answer is yes," end quote. So again, it's a bit of a paradox, I think, when Elon talks about these things, but I think essentially what he's trying to get across, the point he's trying to make, is that a lot of execution risk still exists. He made that point a few times during the Battery Day presentation. There is no certainty that Tesla will be able to achieve all of this, be able to generate $1 trillion a year in revenue, be able to earn enough money on that revenue to be valued as one of the most valuable companies in the world, which they, to some extent, already are. But at the same time, Elon is confident in the roadmap they have put in place. If they can execute on that roadmap, which Elon believes they can do, well, then in 5 years, the stock price probably will be higher. As far as the fundamentals of Tesla's business go, Elon did say that Tesla is not in mortal danger right now, like they were 3 years ago, and then saying like they pretty much have been since their inception. So we've heard Elon talk about that in the past, really saying the Model 3 was sort of the last bet the company type of move, and now Tesla has a clear path to free cash flow positive going forward. So from there, let's put a pause on the interview. We will come back to a portion of it later in the episode though, and let's move on to some tweets from Elon over the last few days. The first couple here are on the total market for electric vehicles and the growth that is going to happen over the next 5 to 7 years. So Elon, in reply to a tweet from Kathy Wood at ARK, which suggested that electric vehicle sales could go from about 2 million vehicles per year now to about 35 million vehicles per year, or 40% of total global auto sales over the next 5 to 6 years. Elon replied, quote, 7 years for sure to 30 plus million new fully electric vehicles per year. 6 years maybe. 5 years is possible, but unlikely. An extra year makes a giant difference when it comes to exponentials, end quote. That's because right now, 50% growth for the electric vehicle market means about 1 million more new EVs per year. But in a few years, if that 50% growth keeps up, that incremental number of new electric vehicles per year is something more like 10 million. We've talked about this concept a lot before when we've talked about Tesla's aspiration to grow vehicle deliveries at 50% per year. You can see that if we just consistently apply that 50% growth target from 2019 sales, then by the time we get to 2029 and 2030, 50% growth would mean going from 21 million vehicles delivered in 2029 all the way up to about 32 million in 2030. So if that even shifts 1 year, it ends up making a really big difference in that total. As far as Tesla's deliveries, Elon did reiterate again the 20 million target. He responded to another tweet on this tweet saying, quote, that's total market, not all Tesla. We do see Tesla reaching 20 million vehicles per year, probably before 2030, but that requires consistently excellent execution, end quote. So again, that before 2030 comment would track with the 50% growth off 2019's base. As far as what cars may make up some of that 20 million vehicle delivery target, Tesla did of course refer to a smaller, more compact model that they hope to eventually sell for about $25,000. But Viv on Twitter asked Elon, quote, think you've mentioned Giga Shanghai and Berlin design centers will both design original cars. Does that refer to the same smaller car? End quote. And Elon replied, quote, both will do original cars, end quote. So I thought that was really interesting. It may suggest that there is more under the product portfolio pipeline for Tesla in the future versus just one compact Model 2 type vehicle. Personally, I'm pretty excited to hear that. I think there's always the trade-off between simplicity, especially in manufacturing and getting to significant scale, versus customer choice and making sure that the offering is broad enough to appeal to all of the segments of the market. But personally, I'd love to see maybe a compact from Tesla, maybe that can be Berlin, and then a subcompact, maybe that can be from China. Of course, if full autonomy actually does happen in the next few years, vehicle design will probably change dramatically and it may not even make sense to sort of fit things into these categories. As far as current vehicles go, we are approaching the end of the third quarter. That'll happen end of day Wednesday. And then I would expect to get production and delivery numbers either before market open on Friday or after market close on Friday, but it could happen anytime before end of day on Monday. Technically, Tesla has said in the past they'll give those results within 3 days of quarter end, but they didn't specify whether that was business or calendar days. So the weekend makes that a little bit questionable, but because of that, I would expect Tesla to get them out on Friday. Anyway, Elon on Twitter over the weekend said, quote, thanks Tesla team for great work on deliveries. For new owners, we super appreciate accommodating us on delivery timing. Definitely one of our toughest quarters in global logistics, end quote. So a bit of a mixed message there as we try to assess what deliveries may be for the third quarter. You have him congratulating the Tesla team on one hand, and then also mentioning that it's been a really tough quarter logistically on the other hand. And then we have to pair this with a leaked email that we had from Electrek last week, which we didn't actually get a chance to talk about on the podcast with everything going on with Battery Day. But they allegedly had seen an email from Elon saying, quote, we have a shot at record quarter for deliveries, but we'll have to rally hard to achieve it. This is the most number of vehicles per day that we would have ever had to deliver, end quote. So of course, that best quarterly delivery number for Tesla happened back in Q4 of 2019. They delivered about 112,000 vehicles. Expectations this quarter are much higher than that, somewhere between 130 and 140,000-ish. So just setting that record would be kind of a disappointment for Tesla. So I think there's probably three ways you could look at this. The first would be, okay, Tesla's just going to barely beat that 112,000. The second would be that maybe Elon is referring to a regional record in this email. I don't think we know the exact distribution, so if he's referring to a US only or a North American delivery number, Tesla could still deliver, 130, 140,000 vehicles while just barely setting that North American delivery record. Or maybe a third way, Elon was just saying this as motivation, and maybe Tesla did achieve that record around the time that Elon had tweeted this update on Twitter. That's obviously very speculative, but that would give Tesla, 5 or 6 more days to continue delivering vehicles. If they're delivering at a clip of, let's say, 2,000 or 3,000 per day, that could add another 10 to 15,000 vehicles, and that would get you maybe somewhere in the 125,000, 130,000-ish range. So I think a lot of flexibility there in interpretation is the point, but we'll talk more about deliveries for Q3 later this week, probably on Wednesday or Thursday. With that being said, let's move on to some of the news in the supply chain. There was an exclusive report from the Korea Times today that Tesla may be looking to actually acquire a stake in an LG Chem spinoff called LG Energy Solution. They cite one anonymous source as saying, quote, Tesla is looking to acquire a stake in LG Energy Solution. Specifically, Tesla is said to be exploring taking up to a 10% stake in LG Energy Solution, end quote. So again, remember, this is an exclusive report to Korea Times, and it seems to be based on one anonymous source, so probably worth considering, but take that for what it's worth. They cite another anonymous source saying, quote, it's quite early to tell if Tesla has an actual plan to acquire a stake in LG Energy Solution, but given Tesla's growing attempts at cost cuts and moves in producing round batteries, it does make sense that Tesla would explore an opportunity to buy a stake in LG Energy Solution, end quote. Which, I don't know, seems like somewhat circular logic to me, and the rest of the article seems to be pretty much speculation to me as well. That being said, let's explore the idea here for a second. Forbes a couple weeks ago reported that a, quote, statement from LG Chem said LG Energy Solutions would be valued at 13 trillion won, or US $11 billion, and it was expected to climb in valuation to more than 30 trillion, or US $25 billion, in the next 4 years, end quote. So going back to the report, it said Tesla may take up to a 10% stake in this spinoff, which would be valued at around $11 billion. So it looks like the max investment here based on these rumors would be about 1.1 billion. And as we know, Tesla just raised about 5 billion for roughly 1% dilution. So in the grand scheme of things, this would actually be a pretty small investment for Tesla. That would be less than 0.25% of Tesla's market cap. Considering we already worked through the math on Tesla over the next decade, investing about $93 billion in battery production, a potential investment of this size would be a really small drop in that bucket. And as Elon said before Battery Day, quote, we intend to increase, not reduce battery cell purchases from Panasonic, LG, and CATL, possibly other partners too. However, even with our cell suppliers going at maximum speed, we still foresee significant shortages in 2022 and beyond unless we also take action ourselves, end quote. So Tesla wants their suppliers to be successful as well. As I said earlier, Battery Day, a part of Battery Day is showing people where they need to be heading. A small stake in LG might serve a similar purpose. And I said earlier we would come back to the Swisher interview of Elon Musk. So I want to do that now because I think there's a piece in here that is about SpaceX but is relevant to the battery situation and particularly relevant to a possible investment here in LG. Elon said, quote, a duopoly is better than a monopoly. An oligopoly is better than a duopoly, but ultimately you want several companies or many companies competing to serve the greater good or serve the customer, essentially. You want multiple companies competing to advance the future of spaceflight so we can ultimately become a multi-planet species in a spacefaring civilization. I think this is actually fundamentally important for ensuring the long-term survival of life as we know it is to become a multi-planet species, end quote. So obviously multi-planet life is a big goal for Elon, but I think if you shift that over to one of his other goals, which is sustainability on Earth, you could pretty much put those words in there in this exact same paragraph and all the same points apply. So as sort of weird as it is from a business approach, Tesla and Elon, I do think really want to help suppliers come along on this journey because as they said, it's a 20 terawatt hour problem. Tesla really thinks they can get to about 3 of that, but that's only about 15% of what is needed. So again, at this point, this is just a rumor, and I'm not going to pretend that I entirely understand an investment in LG, but those are some of my thoughts, and I would like to hear your thoughts in the comments as well. In other supplier news, Piedmont Lithium today announced a 5-year contract with Tesla to supply high-purity lithium ore mineral to Tesla, and that the deal is conditional upon both companies agreeing to start deliveries sometime between July 2022 and July 2023. So my understanding is that Tesla would then take this lithium ore mineral, do the processing for it to put it into the batteries, which would already represent more vertical integration than what Tesla has today. But then, of course, at Battery Day, Tesla also talked about extracting ore from the clay in Nevada. I think they said they had acquired the rights to 10,000 acres to do that. So I think the Piedmont contract would be in addition to what Tesla is sort of extracting itself, again adding further diversity throughout the supply chain. All right, last thing today, not probably something that's very consequential, but kind of interesting. Redditor Archon7862 apparently has a photo of the Cybertruck in the Fremont production facility, which I don't know, is just kind of interesting. It doesn't appear to be actually on a production line. So who knows what it's there for, maybe prototyping of equipment, or maybe even just to show the vehicle to Tesla employees. Whatever the case is, I don't know, just kind of cool to see a Cybertruck in an actual production facility, even if it's not currently being produced. So with that, we will close it out for today. As always, thank you for listening. Don't forget to subscribe, sign up for notifications. Make sure you're following me on Twitter at Tesla Podcast, and I'll see you tomorrow for the Tuesday, September 29th episode of Tesla Daily. Thank you.